The market has fallen quite sharply, and especially if you look at the majors, they have not taken that major hit when I talk about altcoins or if I look at the altcoins. However, the whole market is completely red. You guys can clearly see that the crypto heat map as of now, especially when I focus on altcoins, all of them are deep red. And if I look at Bitcoin and Ethereum, they are trading quite fair. So let's go to CoinMarketCap and see, what is exactly happened. And at the same time, if you look at the global crypto market cap, it is currently at 2.54 trillion. So we were sitting somewhere around 2.7 trillion, and you guys can clearly see and understand that 150 to 170 billion has been thrown out of the market, or probably, taken cashed out of the market. That's the second thing. If I look at Bitcoin, then on a 24-hour time frame, then Bitcoin has just fallen somewhere around 3%. Ethereum is somewhere around 3 to 4% down. But if you look at altcoins, Solana is 6% down, XRP is 6% down, Dogecoin is 9%, and the rest goes on. You look at altcoins, they are more down. Rest of the altcoins are quite down, 12 to 20% down as well. At the same time, you need to understand one thing. What is the reason behind this fall? And I was talking about the same thing in my previous video, that you need to understand what is the reason behind this fall, and in order to track that, in order to understand before this fall comes, you guys need to track DXY, and you guys can clearly see that I was talking about this only. If I take you guys on a 1 day time frame, all you guys need to understand is, if the crypto market is falling, there's obviously something happening inside the world market, or there's some shift inside the paradigm of other investor sentiment, or maybe someone who's pulling out their money from risky assets and parking their money in a safer asset, or let's say in their fiat only. This goes with DXY. You guys can clearly see that DXY reacted from the same zone, and DXY or dollar index reacted from the same zone. And I was talking about this in my previous video, where I was anticipating what is going to be the reaction from this zone. I want to first understand and look at that. If I see a breakdown of this zone, the first breakdown won't be considered. Why? Because that can be a trap as well, even inside the forex pairs. And at the same time, you guys can clearly see that the daily candle was very sharp on Friday. This is the biggest reason behind crypto market falling down, and especially altcoins. Now, there's going to be a lot of people over social media talking about SPX and Bitcoin. Man, SPX has been making higher highs and higher highs, and it is currently trading at an all-time high too. Is Bitcoin doing the same? No. Then shut your, I can't even say that, but yes, just simply shut your mouth and stop correlating all of this bullshit over social media. SPX has nothing to do with Bitcoin, and I do not understand why do people even correlate it with that. The second thing about dollar index is, if we are looking at dollar index from a larger time frame, you guys need to understand one thing. The reaction from this zone has been quite solid first. The second thing is, now this week and the upcoming week, the CPI is going to come very soon. We need to closely monitor that. The push in the DXY or on the dollar index was also because of the non-farm payrolls coming bullish. You need to have, or you need to understand before trading, you need to understand that fundamentals is the biggest reason of, that's the largest reason why you see the market moving up or the markets moving down. The non-farm payrolls the data was quite bullish for USD and bearish for the whole market or the emerging markets. And this is the biggest reason behind why you are seeing this big candle and a weekly candle too, or a weekly bullish candle in dollar index. If I talk about the possibilities, yes, if we see some sideways action, because that's what we've been seeing since 3 weeks. You guys can clearly see a very big choppy movement in this range of 104, exactly 104 to 105.1. This is the choppy area where you see Bitcoin, not Bitcoin, but dollar index hovering up and down. Now we need to closely monitor, are we going up to these levels, taking out some liquidity and reacting from these zones? So if we are reacting from this whole zone or these, 2-3 zones, then it's going to be something different, or we might react something like this. I'm going to show you guys a path. Let's say we are, mitigating these recent highs out, taking a reaction, then taking a jab again at this zone, another mitigation, and then we start falling back. If not that, and let's say from a bullish scenario, if I want to talk about something, you guys need to understand from a bullish scenario, even this can be a possibility that we keep consolidating until the CPI comes out. Let's say if the CPI is beyond the expectations of what the market is expecting, you guys can clearly see dollar index making another sharp move towards 106 or maybe 107, and then maybe it can start retracing down again. These are some possibilities that you guys closely need to watch. And coming back to Bitcoin and Ethereum, I'll show you guys what's the other thing that's making altcoins fall. In my previous video, I was discussing about this as well. You guys can clearly see Bitcoin dominance moving up. Now, what does this signify? Whenever you see Bitcoin dominance moving up, altcoins taking a hit, Bitcoin staying, sideways too sluggish but not dropping much, that's where you need to understand that the money is flowing more into Bitcoin. Let's say, let me show you an example. You look at a lot of altcoins here, they all got brutally slaughtered. Some of them are down, for the past 48 hours, some of them are down somewhere around 20%, 30%, or maybe 10%. Investors, smart money, institutions, whatever you want to call it, all of these market participants are flowing out or cashing out their money out of these altcoins. And where are they depositing it? Let's say if they are, even cashing out 50 grams, they are dropping or they are simply infusing 25 grams in BTC and leaving the rest or staying cash. That's first. And the same is happening with Ethereum as well. But the market dominance of altcoins again is not showing strength at all. The other thing that you guys need to understand is, see, if you guys want stability in your portfolio, less volatility, and if you guys have a very large portfolio of, let's say, $1 million or $2 million or 10 crores or 5 crores, you guys need to understand and get this quite straight. Having your portfolio allocation in Bitcoin and Ethereum is going to help you guys out a lot if you guys are accumulated or staying invested in Bitcoin and Ethereum. Why? Because see, you guys can clearly see when Bitcoin fell, it's down 3%. Okay. Now let me pick any random altcoin and let me show you guys with an example. I'll be picking up randomly 5 altcoins and you guys will be able to see what exactly happened. Bitcoin fell 3%. Remember that. Do you see? Singularity fell 27%. Okay. Now let's take Aptos, another one. Aptos is somewhere down 14%, and it fell 16 to 17%. Okay. Now let me take GRT. Okay. Another AI project, and I'm not just focusing on AI, but I can pick any random crypto, or even you can pick any random crypto and keep your calculations on 21% for GRT. Let's take OP. This has got slaughtered quite badly. I was quite bullish on this and I still am. 20%. So do you see Ethereum? And yeah, let me come down to Ethereum as well, so you guys can clearly see Ethereum went down somewhere around 8% and now has recovered 4% and it's currently down 5%. Let's say that you have, or if you've had a 100K portfolio, and where's the brush man? Yeah. So let's say if you, let me just get this quite up and I'll show you the math. Let's say you had a 100K portfolio and that 100K portfolio was actually or allocated in Bitcoin and Ethereum. Okay. This was your first portfolio. The second portfolio was of the same amount, 100K, and it was completely in alts and a little bit in Ethereum, no Bitcoin at all. What would have happened? In this current scenario, this portfolio would have fallen. Let's say even if your allocation is 70% or 70K is here in Bitcoin and Ethereum. Rest 30% you can divide it in altcoins. Your 70% portfolio or your $70,000 would have taken a max hit of 5 to 10%. 5 to 10% of $70,000 equals to somewhere around $3,500 to $7,000, and that's quite minimal. But if your whole portfolio was 70% into this, you would have simply evaporated more than $21,000 or somewhere around $28,000, 30 to 40%. So, do you understand what is the reason behind not going big on Ethereum, not going big on altcoins, especially, and not just Ethereum? So yes, if you have Bitcoin and Ethereum in your portfolio, that simply balances out your portfolio. If your vision, or let's say if your vision is not that long, you want to hold things for 6 months, and if you are not that bullish on Bitcoin, you want to make sure that your portfolio is not taking huge or larger jabs as well, and the drawdowns are quite small, it's all calculated. Prefer Bitcoin and Ethereum over everything, and that's what I am eyeing out as well as of now. Now let's talk about the technical analysis perspective of Bitcoin. So let me just clear this chart out and show you what I was talking about in my previous video. So in my previous video and the chart that I uploaded on TradingView, I was talking about this. Bitcoin was trading at 68. Okay. Right after this, you guys can clearly see we mitigated $71,600. This was the path that was drawn. We went here and we came back again. Okay. Now let me just cross this out and open the fresh chart again. This was the first path, this was the second path. In my opinion, I was still assuming this path to be played out where we would have mitigated $64,000 out. Fair value gaps all got vanished, and post this, retracement, we would have cleared all the gaps and we would have started moving up. We did not follow the second path, rather we followed the first path, and right after following the first path, we took $71,000 out and then we started reacting. So this played out, or the first path played out. Currently, I am still expecting, if you look at the one-day chart, I am still expecting Bitcoin to mitigate this zone of $67,000 at least. Let's say if we are not even mitigating that, and if I just remove this line, then in my opinion, I'll be only eyeing for two scenarios. The first one is this or this mitigation, and let me just get this right. So this is the first mitigation, and that's where I expect a reaction from. And if we are not mitigating this, then we'll make sideways candles probably for a week or maybe 2 or 3, depending upon what catalyst do we see, and then we start moving up again, probably to 70,000 or 71,000. As long as we are consolidating in this zone of 67 to 70, I think it's completely fine. You do not have to, flip your bias to a bearish one, and this is going to be fair enough. Okay. From an accumulation perspective, let's say if you want to accumulate or trade or swing in Bitcoin, I would highly recommend you guys to wait for this mitigation. And I am only looking at conservative entries right now. I don't want to rush entries just to make 10%. I do not want to just 30 or 40% as of now, because we don't know what is going to come out or get unfolded next week. So you need to cater in that, factor in the fact, and at the same time then build your probabilities or whatever you guys do. So if you want to build a probable scenario where you want to calculate your entries out, I would highly recommend you guys waiting out for this zone of $67,000 to $68,000. Let the price come into this zone, grab some liquidity, and then wait for a reaction on a 4-hour time perspective. So on a 4-hour time frame, you guys need to wait, because you guys can clearly see that Bitcoin is currently trying to stay sideways. Probably we might go to 70,000 and then again fall back if the dollar index keeps moving up to $67,000. Yes, this is going to be an important zone. If we are not able to hold this as well, we can keep falling down to 65. Not this, probably mitigate or take all this fair value gap out, and then we might start another expansionary move, and maybe we can make a new high post this. So that's it about Bitcoin. Make sure that you are staying some cash or sitting on some cash for this zone of $64,000 to $65,000, and at the same time watching out this zone quite closely. Excuse me for that. So yes, this is all about Bitcoin. Now let's hop over to Ethereum. Now, Ethereum, from a technical perspective, I still am a little bearish on Ethereum. Even if we stay sideways and if we just keep consolidating like this, then I'll be looking at the 4-hour chart and draw out some possibilities as long as we stay in a zone like this. If not, I do expect Ethereum to follow this path that I've drawn, come back here, probably consolidate, maybe come back here, or show a move like this again. So this is what I am expecting. You guys closely need to watch out this zone of somewhere around $3,300 to 34 or 34.50, $100 profit. Watch out this zone closely if you guys are planning to accumulate Ethereum in spot. I am sitting cash as well. I'll be accumulating probably 1 to 2 Ethereum, and I am simply waiting for this zone mitigation. If I see Ethereum falling in this zone, I'll be accumulating one whole Ethereum. I'll wait for this zone to play out. Let's say even if Ethereum comes back down to 2,800 to $3,100, I'll be accumulating Ethereum keeping a horizon of 6 months to somewhere around 10 or 9 months. That is what I am expecting out of Ethereum. So my time horizon for Ethereum, if I am accumulating this in spot, it's going to be somewhere around 6 months to 9 months, probably like somewhere around 2 quarters. You guys can simply have that. So yeah, 2 quarters is something minimum that I am keeping in my perspective. I'll be holding Ethereum until that, and I expect Ethereum easily to breach $5,000 to $6,000 very soon. The S1 form has not yet got approved. Once you see that getting approved, you'll see more inflows in Ethereum. Now, that's from a fundamental perspective. What about if Ethereum does not go back to this zone? My entries do not get filled here, and I'm still cash. In that scenario, like I said, you guys need to filter your chart or break it down to the 4-hour perspective and then see whether Ethereum is trying to hold out this whole zone where it's taking. See, it took a graph from this zone. Just mark out this zone and then see, is Ethereum waving around this zone. If it starts to consolidate right around this zone, you guys need to start putting your limit orders over here. You can probably place it around $3,500 to $3,600. One small grab is going to take your order out, but make sure that your orders or your limit orders quantity is not that big. Let's say if you are going full cash here, Ethereum comes back to 28 or $3,000, you guys will be down 20% already. Plan your entries accordingly as long as you guys are thinking about accumulating Ethereum in spot. Now that's it for Ethereum. The important zones in my perspective, if I want to buy Ethereum, is going to be, the first one is going to be $3,500. The second one, like I said, this is actually a range and not a single zone, ranging from 3,300 to 3,400, and the last zone is going to be somewhere around $2,800 to 3,000. That's it for Ethereum. Now let's talk about altcoins. From a structure perspective, here are some levels that I have marked for some altcoins that you guys can probably watch out. And if you are not interested in buying these altcoins that I'll be scouting up right now, you guys can let me know in the comments if you guys want me to share a level for you and to show you a breakdown of the analysis. So let's talk about AGX. So AGX was my entry or my call out from here, and it pushed up quite well. But let's talk about what can it do currently. So from current market scenario, the AI perspective has got a little shaded out, and you see the narratives of AI as of now has not been that good. So AI is something where you see a lot of narrative based playouts, and as long as you do not see that coming, you don't see any movement here. So if you are planning to accumulate singularity from a long term perspective, your first point of interest or area of interest can be this, or else you guys can simply wait out for singularity come down to this zone of 35 cents to somewhere around 40 cents, only if it comes down to, or else this zone is fine. Alt is not something that I am tracking much, because you don't see much candles here, so you cannot actually analyze. Yes, I am having a position still in Aptos. My entry point is somewhere around $9.1 to $9. I'll be basing out, or I'll be simply DCing out some Aptos again, and I am quite bullish on Aptos. We have a token unlock coming, so I would rather prefer or suggest you guys to probably consult your financial advisor and at the same time accumulate it post the token unlock, because I think tokens worth $100 million are going to come in the market circulation as of now. So you can wait out for that and then start accumulating Aptos. The current level for Aptos is quite cool. And this can be the first zone if you guys have not accumulated Aptos, but if you do have interest. If you do not have interest, not an issue, you can simply check this out. Arbitrum. Now, if Ethereum's S1 or Ethereum's ETF starts to get approved, Optimism, Matic, and ARV. These three scalable projects are probably going to see a good inflow in their blockchain, and at the same time their market cap as well. So the more money you see getting infused here, the more the prices are going to shoot up. So Arbitrum at the current zone is a good buy, or else this zone of 73 cents to 80 cents can be a good or a great zone in my opinion. Like I said, if you are interested in accumulating Arbitrum, you can probably watch out this zone, or else the second zone ranging from 73 cents to 80 cents. You can start placing your limit orders and simply have a limit order, because you do not know how long the liquidity grab is going to last for. And if you are thinking that the market is going to come down here, give you an hour or two and keep moving like this and then show you an expansionary move, then my brother or my sister, that's not going to happen. Let's talk about Atom. So Atom, I had an entry at Atom and I still am holding. My stop loss has got triggered, but I'm holding it in spot, and I did not expect Atom to take out my stop. However, I'm not letting my stop kick me out, because Atom from a fundamental perspective is right. My invalidation is $7.2. So let's say if I'm getting stopped out, I'll probably be extending my stop loss to another 7%. My portfolio allocation in Atom is very small, so I actually do not mind extending my stop loss. If that was big, I would have simply respected my stop loss and would have simply got out. The whole perspective behind extending my stop loss is I am not holding Atom as a swing. I did not enter Atom as a swing that, let's say, if I'll just churn out 30 to 40% and I'll just leave. No, that was not my point. The only point of entering Atom was I'm still keeping a target of somewhere around $20 to $30. My long-term perspective is still going to be intact. And if you guys are interested in accumulating Atom, then the current zone is completely fine and it's super safe. You guys can clearly, think about accumulating Atom from a range of, let's say, $7.2 to somewhere around $7.8, and it's completely fine. Only if you guys are interested in accumulating Atom or Cosmos. The second one is BOM, or Book of Me. I got stopped out of this last night and I simply took that loss, and I did not re-enter again, and I have no plans of re-entering it again. I want to see how the reaction is going to be. Dot. So Dot is currently trading at a great zone. This is not that impulsive in its price movement, but it's a very good fundamental project, so you guys can probably watch this out. If you guys want to accumulate the zones are quite clear, 5.6 to somewhere around $6. The current zone is still fine. You can start placing your limit orders in any crypto that you want to. Let's say even if I'm not analyzing your crypto, start placing your limit orders. You do not know what's going to get unfold. FET or Fetch AI, another AI project. I am currently avoiding AI projects. If I'm having a position, I'm not accumulating anything. GMT, this is completely bearish and simply avoid it. I don't see anything good happening. GRT is fine, it's currently trading at a great zone, but another AI project, and I would simply highly recommend you guys to stay out of AI as of now. From a long-term perspective, if you wanted to, or if you have an interest in buying any of these AI projects, the zones are quite clear, ranging from 22 cents to somewhere around 25 cents. You guys can probably watch this out. IMX is a good gaming project, and I would highly recommend you guys to probably read about the fundamentals over CoinMarketCap and then take a financial decision by consulting your financial advisor as well. However, if you guys are planning to accumulate IMX, then $1.6 to $2 can be a great zone, and yes, you guys can probably watch that out if you want to accumulate IMX. Injective, I am having a huge position in Injective, did not get stopped out, and it did play out. I am going to hold Injective for a quite, I think, for a real long time. My my horizon is going to be somewhere around 6 months to 12 months, and I'm not going to do anything. Let's say even if I see injective trading somewhere around $22 or $20, I'll be simply adding my position more. And yes, the invalidation is not something that I currently think injective is going to do. This was a good liquidity grab to balance out the imbalance that it had created. From an investment perspective, you can think about accumulating injective from this big zone of $20 to ranging around somewhere from $20 to somewhere around $25 to $26. The current price is also fine, but you guys need to closely watch how Bitcoin and Ethereum plays out. If you guys see Bitcoin and Ethereum falling down more, yes, we do have a thick chance of seeing injective somewhere around $24 to $26. Near protocol is a strong project. It's essentially strong, and the price action is still bearish as long as it does not invalidate this and closes it below this. The accumulation zone perspective for near protocol is going to be $5.6 to somewhere around this whole price zone. So there's like a huge zone for the near protocol, and you guys can probably watch out this whole zone. And I do not mind, and I don't even think that accumulating near is something right after accumulation that you're going to realize. So yes, if you are planning to accumulate near, $5.6 to $6 can be a good range. OP is currently trading at a great zone. Got stopped out here. I do have an entry, but I did not enter here, so I do not mind. But yes, if we are planning to enter OP like this entry was, you guys don't know if this is going to be the last liquidity grab for OP, and then we see the expansionary move from OP. Yes, talking about the accumulation zone, it ranges from $1.9 to $2.2. If you guys are willing to accumulate, or if you guys are interested in accumulating OP, then you guys can watch out this zone. Render avoid. Pixel was performing good, but yes, this zone of somewhere around 0.32 cents to 37 cents can act as a good zone, because this is where I got the move for. Popcat not good, Render just avoid. Ronin is good. Ronin is a gaming project, and yes, when you see gaming project performing nice, you'll see Ronin doing the same. So this is going to be the first zone if you guys are thinking about accumulating Ronin. The zone is ranging from $2.6 to $2.8, and yes, you can think about accumulating Ronin in that. Rune, as long as $5.1 is not validated, I'll be bullish on Rune. $5.1 to $5 can be a great zone to accumulate Rune. Sol. So I have not accumulated Sol, but if I see Solana trading around $137 to $150, you guys can think about accumulating Sol. WIF is something that I'm going to avoid as of now. WLT is something that I'm not going to avoid, and I'll be monitoring this out. The price action, if I see something happening, I'll post it on my TradingView or on my Telegram. Wormhole is something that I posted in my last video, and you guys can clearly see that I posted. When I posted, it was trading around 61 cents or 57 cents, and then it gave an expansionary move of somewhere around 25 to 30%. This was a good spot pick, and this tail is a good spot pick. It's not that this is the only move that is going to give. So you guys can clearly see it trading around $1 to $2, but do your own research before this as well. This is it for today's update. I have shared the levels. That's the most important thing. No matter how much I try to make you guys understand, try to always look at dollar index, the Bitcoin dominance, and the USDT dominance before you guys want to accumulate anything or invest a single penny inside the market. These three factors are the most important factors. If you do not understand technical analysis much, try to understand what's happening in the real world, or the emerging market, how is it performing, and then try to build up a bias. It's not that you see a level, you see markets going up, you simply buy. That's not the right time. Whenever you are seeing a good crash, and if you want to buy something, and if you are not good at reading fundamentals, not good at reading technicals, make sure whenever you see a 20 to 30% crash, you build up a system or a basic. You have this plan that whenever I'll see a 20 to 20% crash, I'll be investing in Bitcoin and Ethereum. That's the best possible thing that you can do, as long as you do not know how to read technicals and fundamentals. So yes, this is it for today's update, and I'll see you guys in the next video.